Yes.
Chinese President Xi Jinping has issued a clear warning.
Such times are very much like the 1930s. We have a breaking down of the monetary order.
Hi guys, welcome to Cashcraft Finance, and we got a problem. Not too long ago, the billionaire Ray Dalio posted a video titled Principles for Dealing with the Changing World Order. This was a 43-minute long presentation about the impending downfall of every major economy as we know it, how these evolving cycles typically happen on a regular basis, why the times ahead will be radically different from those that we've experienced in our lifetime, and how we could best prepare for what's to come based on predictable events that seem to happen once every 100 years. Although now he says we are living through exactly what he was talking about. As in, we've just seen weakening of the dollar, tensions around the world, and lost confidence in the United States. All signs that the shift isn't coming. It's already happening, and the question isn't if we're in the middle of a changing world order, it's how deep in we are, and what we're going to do about it before it's too late. That's why we really got to discuss exactly what he says is going to happen and what you could do to best prepare going forward. Because like it or not, this is going to have a direct impact on you, especially if you're caught off guard. Although before we start, as usual, if you enjoy videos like this, it would seriously mean the world to me if you hit the like button or subscribe if you haven't done that already. I know I hate asking, but all the metrics say it makes a significant difference in the channel. And as a thank you for doing that, I will do my best to read and reply to as many comments as I can. I've said this before, but to quickly bring you up to speed. All of this starts with the US dollar. For the last 80 years, our money has become the most powerful currency in the world because it's what's known as the reserve currency. This refers to money that's commonly accepted throughout the global economy. And since 1945, the US dollar has taken that top place because of its resiliency, lack of volatility, and safety. So when you have dozens of countries all around the world trading goods and services with one another, it helps to use one universal currency accepted around the world with a predictable value to conduct those transactions in. Otherwise, you run the risk of getting paid in one currency that could be difficult to exchange, and by the time you're able to convert it back to your native currency, the value may have risen or fallen. Of course, the United States benefits from this as well, because the more countries hold the US dollar, the more demand there is for the US dollar. The more countries lend the United States their money, and the more buying power we have throughout the rest of the world. But the United States is now said to be under threat of losing its reserve currency status, as other options are starting to take away market share, especially with the implementation of tariffs. So in terms of why this is happening, Ray Dalio explains that this is all part of the changing world order. As he explains, throughout history, there is a constantly changing world order between the leading economy and the rising economy, and over time one will fail to make room for something new. For example, prior to 1945, the reserve currency was held by the British pound, which lasted for 105 years, following the French Revolution, followed by the Netherlands, followed by Spain and Portugal and Venetian gold, and so on, with the understanding that reserve currencies never last forever. And about every 100 years, they change through a transition that lasts anywhere from 10 to 20 years. In terms of what causes this, Ray Dalio summarized this into 3 different segments: the rise, the top, and the decline. During the rise, after every new reserve currency, there is a period of peace and prosperity, where people bet and borrow that the system is going to continue. This is typically marked with strong education, critical thinking, character building, and work ethic that allows for innovation, new technologies, and other resources for a continual rise in productivity. However, in order to finance that rise in productivity, there has to be a system in place for borrowing, where other countries are able to convert their currencies into investments to share in that success. In fact, Ray Dalio even points out that all of the most powerful reserve currencies followed this exact same path, leading to the top at the peak. The general consensus is that while people are earning more, the more expensive their time becomes, relative to other countries who are willing to do the same work for less. On top of that, other countries have the ability to take blueprints from the latest innovations and then replicate the same things for a fraction of the cost, reducing the leading power's competitiveness. At the same time as people become richer, they tend to work less. Values change across generations, and as a result they continue borrowing at the same capacity, without contributing to more innovation. Now, even though excess spending and borrowing could be in the short term, long term, he explains it actually weakens the economy because at some point, it becomes unprofitable to sustain, and the country grows deeper into debt, potentially then resorting to borrowing from poorer countries who are able to save more. The tipping point, though, comes from when people lose their faith in the reserve currency, refuse to lend more money, and would rather sell than reinvest their profits, leading of course to the decline. Ray Dalio explains that during an economic downturn, if a country can't sustain their own debts, they have to choose between defaulting and printing more money. They're always going to choose printing more money. This devalues the currency. It increases inflation, and since the 1990s, The central bank has stepped in 3 times to finance an economic collapse. That would be during the .com bubble, the mortgage crisis, and again during COVID, giving way for other countries to eventually come in with their own currency and try to change the existing world order. Surprisingly, he explains that these events have repeated themselves time and time again since the beginning of the Roman Empire, and even though no 2 changes are the exact same, there is a familiar blueprint that we could look to in terms of what's going to happen in the future, and that of course brings us to today. Alright, so in terms of what's happening right now, here's what Ray Dalio just had to say. 1. He believes we're at the end of a long-term debt cycle. According to him, the United States is now entering a danger zone, with first debt to GDP reaching 122%. This means we are spending and borrowing more money than we're able to produce every single year. And this is the reason why we've seen government debt and interest payments continue to rise, recently hitting a record high, now surpassing the amount that's being spent on national defense. 2. We have several forces all colliding at the exact same time, from debt, monetary policy, internal conflict, and external conflict. In this case, he says that a huge amount of attention is justifiably paid to the announced tariffs, while very little attention is being paid to the circumstances that cause them, and the biggest disruptions that are likely still ahead. For him, this isn't just about tariffs. It's about a major breakdown between monetary power and political order, which occurs just about once every lifetime. For example, he believes the United States borrows too much, while countries like China rely on the US to buy their goods. And when there's a breakdown in trust, it weakens American manufacturing, it hurts the middle class, and it changes how our money is used around the globe. This leads us to know 3. Extreme political division. In fact, according to polls, we are the most divided we have ever been in history. Why? Well, in the United States, there is a big difference between people's education, the opportunities they have, how much money they make, and what they believe in. And when the government can't solve for some of these inequalities, both sides fight to stay in control. And that leads to a lot less stability throughout the rest of the world. That winds up with 4 global orders breaking down. As Ray Dalio explains, we've taken an America first approach rather than a multilateral world cooperation, which would lead to the most growth for everybody. This comes at the long-term expense of our goodwill. This is why he recently went on Twitter to say that you shouldn't be distracted by the news and tariffs. That's merely the sideshow. And if you pay attention to that, you're going to miss out on the bigger picture, like how the conditions and the dynamics of these big forces are causing these news-making changes. B. Fail to think through how these news-making changes will affect these big forces. And C. Fail to keep focused on how this overall big cycle and the parts that drive it typically transpire, which will tell you a lot about what is likely to happen. On top of that, Ray Dalio isn't the only one issuing a warning like this. The billionaire Howard Marks is also saying the exact same thing, and he's credited as predicting the 2000.com bubble, the 2008 financial crisis, and the 2021 COVID bubble. So here's what he had to recently say. 1. He thinks globalization is ending. As Howard Marks explains, cheap labor from abroad, especially China, that was the invisible hand that allowed us to gain lower prices, lower inflation, and lower interest rates. We had unlimited access to global supply chains. We could outsource anything that we've ever wanted to. But that dynamic is quickly changing. This is said to result in higher prices, slower supply chains, and greater volatility, of which tariffs are just the symptom, to a much greater issue that can't quickly be solved. 2. He believes that domestic manufacturing is going to rise. Defense, aerospace, commodities, infrastructure, and utilities will increase, and safe haven hard assets will matter again, and losers will be global retailers reliant on imports, debt-loaded companies, tech firms with slim margins, and emerging markets tied to exports. And 3. This might result in some very good buying opportunities. As he recently said, now with unimaginable risks on the table, it's appropriate to sniff out for bargains, the babies that are being thrown out with the bathwater. We're on the case, well, as far as what the markets think of this, as well as what's right in front of us today. None of this really compares to what's happening in the bond market. Here's the thing, when the market falls, investors tend to rush into safe haven assets like US Treasuries because our government is seen as a very stable place to park extra money normally. The more investors buy in, the less Treasuries have to pay, because there's so much demand for guaranteed returns. But this time the opposite happened. The market crashed and Treasury yields went higher, suggesting that investors and countries weren't buying Treasuries anymore. They were in fact selling them. This resulted in interest rates going up during a time the market was going down, the exact opposite of what you would expect to happen historically. And as Deutsche Bank said, the damage has been done. The market is reassessing the structural attractiveness of the dollar, the world's global reserve currency, and is undergoing a process of rapid Or I guess, in other words, for the first time in decades, investors were not only pulling their money out of the markets, but also out of the United States. And according to him, this is the most concerning piece since the tariffs began. It's showing a deterioration in confidence in the US's place in the world. Of course, alongside that, there's also the rumor that China was purposely selling off their US treasuries as a way to force up interest rates and hurt our economy, especially now that they've increased their gold stockpile for the 5th straight month. But I do think it's important to reiterate that this is not 100% confirmed, and I take it with a grain of salt, because there's no way of proving it was 100% them. We just have no way of telling. Regardless though, shortly after this, the Federal Reserve went on record to say that they are prepared to intervene in financial markets if liquidity issues arise, basically reassuring everybody that if interest rates spike up too high, they are prepared to artificially bring them back down to save our economy, pretty much reaffirming exactly what Ray Dalio said would happen. As countries continue to print themselves into more and more debt, that just becomes harder and harder to pay back. That's why one analyst went to say that this sell-off really could be about default risk. This might be saying something about the US government's ability to function. There's every reason to be concerned about the government is a going concern. Now, thankfully, since then, the treasury market has somewhat recovered. Although in terms of my own thoughts and whether or not this is something to actually be concerned about, here's what I think overall. Ray Dalio has made quite a few predictions, and admittedly, he has a decent but not perfect track record. For example, in 2015, he warned of a 1937-era stock market slump, but the markets wound up continuing to move higher. Then in 2016, he said that central banks would get so desperate that they'll give away money, which wound up later being the case in 2020, although in fairness, no one could have predicted the COVID shutdown. Later in 2018, he predicted that there would be a market surge ahead. And if you're holding cash, you're gonna feel pretty stupid. But the market ended up being down 6% over the following 12 months, before later resuming new all-time highs. Then he went on record to say that the US dollar reserve status was in jeopardy, which has started to play out, but not yet to the degree that would make a material difference. All of that is to say that no prediction is perfect. And in a situation that seemingly changes by the day, anything can happen, and you're gonna have some predictions come true. Just because if enough people say it, eventually one of them is going to be correct. This is why I certainly appreciate the warnings, and I love hearing the rationale for why certain events are taking place, like the bond market sell-off. But we also can't discount the fact that the Federal Reserve said they're willing to step in and prop the markets up if needed, and if history is any indication, they're going to continue doing this for as long as they can. In essence, the free market really no longer exists, and everything could be easily manipulated with just the click of a button. Take China, for example. They own about $800 billion worth of treasuries. If they wanted to, they could tank the entire bond market by selling them off all at once and forcing the Federal Reserve to intervene. Or it could all just be a rumor to blame China on the lack of confidence within the United States. Who knows? This is why I don't think it's a good idea to completely restructure your entire investing philosophy based on events that could take decades to play out, during which the market continues moving higher. Now, that's not to say we won't see a stock market drop in the future. I have no idea. It's just to say that the markets are completely irrational, and it's best not to time things around events that just might not happen. This is why, for me, I'm allocating about 1/3 of my money towards US stocks, 1/3 towards international stocks, and another 1/3 towards a Bitcoin ETF, along with some treasuries that I also hold on the side. That way I'm not going to miss out on the upside. If stocks go lower, I can continue buying in, and if the US dollar does lose dominance, Bitcoin ETF should hopefully take its place. Of course, I could also be completely wrong, so don't listen to me, because I'm just a dude in a half-converted garage making YouTube videos, and I just really enjoy hearing out all perspectives, hearing what other smarter people than me have to say. And no matter what, hitting the like button and subscribing if you haven't done that already. So with that said, you guys, thank you so much for watching. Thank you so much, and until next time.